This is Sage, you're watching Kalkine TV, and this is the Hot Performance Show, a show where we take a look at stocks and sectors that could be heating up. And today we'll be exploring the latest news coming from an ASX-listed company, Woodside Petroleum. So let's get started. Australia's leading petroleum exploration and production company Woodside Petroleum recently announced its fourth quarter report and a deal with Commonwealth Liquid Natural Gas. The ASX-listed company informed that this quarter has witnessed substantial revenue supported by increased product pricing and the developments like binding share sale agreement with BHP for the proposed merger, final investment decisions on the Scarborough and Pluto Train 2 projects, as well as progressing Woodside Petroleum's new strategic energy investment only, helped its case. In today's episode, we'll zoom in and have a closer look at the company's prospects as well as achievements, so stay with me till the end. And let's now take a look at the key achievements by Woodside Petroleum in the quarter. The company's sales revenue is up by 86% from its third quarter report. The sales revenue and the average realised price increased to 90 Australian dollars per barrel of oil equivalent, up by 53% from the third quarter. The company also signed and executed a binding share sale agreement with BHP Group to merge BHP's oil and gas portfolio with Woodside. So additionally, Woodside Petroleum entered into a sale and purchase agreement with Global Infrastructure Partners to sell a 49% non-operating participating interest in the Pluto Train 2 joint venture. Setting its ambitions and goals in the right order, Woodside has declared a $5 billion Australian dollar investment target for new energy products and lower carbon services by 2030. The company's also recently inked a successful deal with the Commonwealth LNG. Let's have a thorough look at the aspects of this deal. And Woodside has struck a flexible long-term deal to acquire LNG from a US Gulf Coast LNG export project. The heads of agreement signed with Commonwealth LNG includes buying 2 million tonnes of liquid natural gas per year from Commonwealth's proposed export terminal in Cameroon over 20 years. Purchases are scheduled to commence in the June quarter of 2026. And Commonwealth is planning an 8.4 million tonne per annum LNG liquefaction facility, comprising 6 trains on the west bank of the Kalkine ship channel at the mouth of the Gulf of Mexico. Now, with the start-up planned in 2026 of the second quarter as well, this proposed agreement comes as Australia and Qatar were overtaken by the US as the world's biggest exporter of liquid natural gas for the first time in December last year. And the US acquired the number one position due to its vast source of cheap shale gas that shifted it from being a net gas importer to a top exporter in less than 10 years. So to wrap it up, the proposal adds to Woodside Petroleum's current arrangements to secure LNG from the United States, including Cheniere Energy's Corpus Christi LNG export facility in Texas. And it's safe to say that Woodside is also slated to considerably expand its footprint in North America via the agreed $41 billion merger deal with BHP Petroleum. And meanwhile, on the ASX, the Woodside stock was spotted trading 0.039% up at Australian $25.43 per share in the morning. So thanks for your company on that report. That's all for now, and keep watching Kalkine TV for the latest market trends and hot insights as well as expert talks. Sage signing off for now.